All right, what's up, guys? Anthony Special here with Hawkeye Traders. Welcome to the video. I want to talk about Apple here. Taking a massive gap on earnings report. Not sure if you guys caught the headlines. Also seeing huge buyback from the company itself. Let's talk about where it gapped to. Let's talk about price action, and let's talk about this massive, year to date, the largest peak in volume. What does all this mean, and how can it be played? So, again, earnings report, massive gap up, meaning during the overnight session, earnings report came out after normal hours, opens up the next day with this massive, huge gap up. But where does it gap into? Okay? It gaps into a prior daily gap that has not been filled. Is this surprising? No, it's not. Right? Notice. It gapped up. It literally went from the open at 186.65 to the high of 187. It only went up 35 cents from its opening price to the high of that whole daily candle. And notice what happened. We basically, from this gap being filled, this tiny little gap here I've marked off, excuse me, we have literally fallen back from that, right? So the whole day, that gap up has been provided a selling opportunity or profit taking, or probably a whole bunch of stops that got triggered, probably sitting right above these prior highs here at 178, 179 roughly. So what are my thoughts, right? This is all great information. Yes, we realize and we're able to recognize this area that we gapped into. That's all fine and well. This, taking a huge gap like this, with 35 cents of follow-through, to me, is a massive sign of weakness, okay? That's the way I interpret it. Really kind of depends what's going to happen in the next couple days. But I wouldn't be shocked if we come back down and retest these highs here at roughly 178.80, 179 roughly. Okay? We do have an old gap here, which you can see we were very responsive to. Okay? I mark off these daily gaps because they do make a difference. All right? You can see we aggressively pushed in, pulled back, broke above it, and then failed pretty aggressively. So notice this break of the gap placed a newly appointed lower low. This break of the gap again appointed a new lower low. All right, this is a huge breakup here. So my expectations would be, to the very least, we pull back to fill these highs. Okay, perhaps test this prior gap that we've been very reactive to, and maybe even pull all the way back to filling the gap itself. Right? About 5.5%, roughly. Would I be surprised? No, I wouldn't. Even if this market's going to go higher, it's probably going to pull back first. Now, we've been in somewhat of a correction mode lately, right? Some of these big cap stocks that are reporting really strong earnings and buybacks and, all this news that's hitting the wire has definitely made this correction take a bump. Have we placed a higher high or a higher low yet on the indices? And the answer to that question at the moment is no. Okay? So, understand something. During the beginning of any bear market, throughout any bear market, there are going to be these micro bull runs that are genuinely designed to fake out retail traders. Okay? You can go back to any big picture pullback in the market. There will be these extraordinarily aggressive micro bull markets or bull runs inside of the macro bear run. Okay? So just keep that in the back of your mind as you're playing this out. I see the highest volume printed year to date, right? I just moved the chart year to date. This is 2024. The highest volume traded from January 1 to today's date, right? I'm filming this on May 5th, 2024. It is 4:20 p.m. Eastern Standard Time. The fact is, the highest volume printed, that bar closed significantly lower than it ever traveled higher from its open. That, to me, is not a very strong sign. Okay? It's not. So, do I think if we are turning the corner here, which I don't necessarily think this correction's been fulfilled yet, do I think that we go higher from here, or do I think we continue to pull back from here? We could push up. We could retest this gap we filled. There's a downward significant channel structure up here at 189. We could test that. You know, I wouldn't put that by. We have the last kind of one of these significant lower highs here. This is at what, 191? So could we bump up and then fall back? It's totally possible, right? But from what I see in this moment, where we sit currently, based on the volume and price action, this area initially provided resistance. If we're able to push through it, I believe we'll find more significant resistance at 189 and more up here at 191. If that happens, right? If we come up and push higher. If we don't, again, I think we fall back, 179, back to test this area, 177, potentially even filling this at 173.25. Highest volume printed, candle closes in the lower 15% of the overall move. That's very telling to me, and it should be to you. If your education, if you're coaching that whoever you're following, if you're whatever you've learned along the way as a trader, okay? We're all at different stages in our career. If whatever you've learned is not volume and price action focused, I can assure you at some point in your career, you're going to end up circling to volume and price action and understanding that without those two components being the forefront of your trade plan, you're probably going to have a really hard time finding consistency. Because the only two things that will always matter is volume and price action. And if those two things are not what you are focused on, it doesn't matter if you're in a bull market, a bear market, a ranging market, those two components are everything you must have a full, in-depth understanding of. Okay? You can apply any indicator to the chart that you want. Right? The only thing you see on every one of my charts is volume, price action. Okay? My own drawing is just my interpretation of understanding what's happening between the buyers and sellers. Right? I can identify with these gaps. I can identify with these trend lines and channel structures where support or resistance may be found. Right? That's only supporting my interpretation of volume and price action. So whatever it is you're adding to your chart, it should be supporting your interpretation of volume and price action. Software indicators, traditional indicators, proprietary indicators, something you've bought, something you've sourced on TradingView or your platform for free, I really don't care. Okay? If it doesn't help you or serve you in better understanding the relationship between volume and price action, unfortunately, it's probably just taking up valuable real estate. Right? It's probably confusing the way that you look at the market. When the reality is, understanding that relationship is the foundation of anything and everything that every successful trader understands. Okay? You're going to go, but what about order flow? Okay? Because that's what's very trendy right now in the social media area. Order flow. This word order flow. Okay? Order flow is nothing more than a way to interpret volume. What is volume? Volume is the interaction between buyers and sellers. Okay? So having the foundation of what volume and price action are doing still requires and still must be the foundation of your entire trade plan. So with that, guys, I'll leave you with that. These are my thoughts on Apple. If you enjoyed this video, please leave a comment below. I'll be happy to answer and respond to you. If you have any questions, feel free to reach out to myself or my team. God bless, and I will see you in the next video.